Hello, and welcome to today's episode of Container Bytes. I am Julia Frohwein, here with our resident freight guru, Judah Levine, ready to kick off another bite-sized session of the latest in freight. Judah, how are you today?
Good. How are you doing?
I'm doing okay. Yeah, doing okay. All right, let's jump straight into it. The Strait of Hormuz. Okay, as we know, it's still closed despite Operation Freedom. And now there's an official Iranian Hormuz toll authority. What does this mean for the container market right now?
Yeah, so as you said, there was Operation Freedom at the beginning of last week. It was quickly paused, although it did succeed in extracting a couple of U.S. flag vessels from the Persian Gulf. At the same time, it also restarted kind of exchanges of really naval fire between Iran and the U.S. Iran also responded by renewing missile and drone attacks on the UAE, but in any case, it was quickly paused. President Trump has been saying is now ready to restart Operation Freedom. Negotiations are continuing, making progress, not making progress, still a lot of uncertainty. And at the same time, as you said, Iran has set up the Persian Gulf Strait Authority, which is their new government body for coordinating passage through the strait with their authorization, presumably also with payment. So this is kind of a sign that they want to entrench authority or are ready to entrench authority over the passageway. Yeah, so a lot of uncertainty and maybe not a lot of progress in terms of being reopened, but who knows? For the container market, though, it really means more of the same. It means containers trying to get in and out of the Gulf are going through these alternative accessible ports in the Gulf of Oman or in the Red Sea, and then continuing on by road, which is moving containers, but is complicated and expensive. And for the broader market, it's really still impacted by the price of oil, which is keeping bunker fuel prices elevated as well. Maersk in an earnings call this week said that the additional fuel costs are costing them an additional $500 million a month. So significant kind of cost pressure on carriers. But Maersk also said that they are succeeding in passing these costs on to their customers through higher freight rates.
Okay, but we've seen different rate trends for different container lanes. So how does that square up with what Maersk is saying?
Yeah, it's a good question. It certainly seems uneven. So on the Trans-Pacific, since the start of the war, we've seen rates kind of gradually continue to increase. So from the start of the war until now, Trans-Pacific rates to the West Coast are up by $1,000 per 40-foot container, up to $2,800 per container. To the East Coast, it's up $1,300 per container, up to $4,300. But that's not the case everywhere. If you look at the other major trades like Asia, Europe, Asia, North Europe now is at $2,800. It's only $300 higher than it was before the war. To the Mediterranean is about even where it was before the war at 3,600. But you got to keep in mind that we're in the low demand period, post Lunar New Year, pre-peak season. And so generally rates will be falling during this period and they're staying relatively elevated for these lanes. So there probably does represent kind of additional higher rates than there otherwise would be. If we compare it to the previous low demand period, post peak season before Lunar New Year back in October, rates to North Europe were at $1,700 and now they're at $2,800. And to the Mediterranean, we're at 2,100 and now we're at 36. So even if they haven't kind of steadily increased like we saw in the Trans-Pacific, they're probably higher than they were. And in terms of dollar amounts, these lanes are kind of generally within range of each other. Trans-Pacific and Asia, Europe, they're at about the same level in that $2,800 range.
Okay, so let's stick with ocean for another minute or two. So as you mentioned, ocean peak season is just around the corner. Is there any anticipated impacts on peak season due to the last few months of disruption?
So the National Retail Federation just released their U.S. ocean import data and projections, and they estimate or project that June imports will be down 2% compared to month on month compared to May. They'll increase about 4% in July. So we have June going down, July coming up, then ease slightly in August, and then further in September. And so if these estimates are correct, that would mean that there will be a trans-Pacific peak season, right? Things are going to pick up in July and stay kind of elevated in August, but it would be a relatively short and a relatively muted one, so that the peak that this year would be in July would be 8% lower than last year's peak in July, although last year's peak was kind of boosted by tariff deadlines, but it'd also be 6% lower than the peak season peak in 2024, so not terribly strong. Is that a function of tariffs? Is that a function of higher prices and impacts on inflation? Could possibly be both. It certainly reflects kind of importer caution, probably economic uncertainty for what's going on now. Back to that Maersk earnings call, they also suggested that there could be a downturn in overall ocean freight demand as we head into the second half of the year, and that will be a challenge for carriers because, as we said, right now they're trying to boost rates through these fuel surcharges. We also started seeing them blank sailings. There are reports that even some containers in the Far East are being rolled to later dates because of capacity measures. So they're trying to keep rates up on that level, but they would love to have a demand boost, increasing volumes and increasing freight rates. And if that doesn't happen, it could be a challenge for them as they'll still be facing these higher fuel costs. But it also shows that there doesn't seem to have been much front loading, right? We're going to have probably tariff changes in July, and we haven't seen much of a rush before then.
Okay, so you just mentioned the trade war front loading. The much anticipated China-US summit is happening this week, and there's been a bit more development around tariffs in general. So what's the latest on there that you can share?
Right. So Trump and Xi are meeting this week. Initially, this summit was meant to focus on trade. Kind of the status quo agreement was put in place last year in November and is meant to expire this year in November, including things like port call fees, which was a big story last October, November. And certainly being complicated by the war as this, as another element that China and the US might have different approaches to. In terms of the trade war, though, at the moment, US tariffs on China are lower than they were back in February. And that's when the Supreme Court invalidated the IPA tariffs. We know the White House quickly replaced IPA with a 10% global tariff, which would be lower than for China, it was 20%. They introduced this tariff based on a different trade law called Section 122. That's supposed to be in place till July, and then tariffs are going to be re-implemented, possibly around IPA levels via other trade laws through Section 301. But there's just a wrinkle this week in that the U.S. Court of International Trade, which is the same court which initially invalidated IPA, ruled that the use of Section 122, which is really meant for a balance of payments issues, was being used in an invalid way this time as well. So this Section 122 that's used for this kind of stopgap between February and July has now been invalidated as well, and is going to require refunds. The ruling was limited to the plaintiffs, so it doesn't automatically mean that anyone who's paid tariffs between February and now will get a refund, but it opens the door. Now there's precedent for other lawsuits, which presumably would go the same way. The White House has appealed and has asked that 122 stay in place until it expires because of the various ramifications it would have for trade. If that is accepted, the appeals process would probably, if they keep losing, would probably go to the Supreme Court, which would probably take longer than July anyway. But certainly another kind of development in this tariff story, and the possibility that there'll be another round of refunds if this is also invalid for everyone else. So kind of stay tuned there as well.
All right, sounds good. All right, thank you, Judah. As always, super interesting insights. If you enjoyed this session, please hit the subscribe button and you'll get notified about all our future episodes. Thank you for joining, and goodbye.